Good morning. It's Monday, July 21st. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So we got stock futures pushing higher here, breaking out above that 63.30 resistance point, looking to target some of these higher levels, 63.66 and even 63.97, just under that 6400, where we see the first resistance points coming in after this breakout. And this comes after last week's bounce, which the S&P 500 pushed on up to a fresh record high. The market seemed to be paying less and less attention to tariff headlines while focused on earnings and the economy. So looking at the S&P 500 sitting at 6350, that's up about 15 points. The Nasdaq at 23,290, up 65 points. Both are up about 0.3 of a basis point here, and this comes at 5:25 a.m. Central Time. So we're seeing some of the other analysts out there, Morgan Stanley, they're saying that investors should stay bullish on stocks as earnings and the momentum and the positive operating leverage come ahead. Goldman Sachs also said that the earnings season is off to a solid start, while recent dollar weakness should provide a tailwind for earnings. And not only earnings, but many different commodities out there. If you look at the dollar index, and I'll get into it in a bit here, bouncing, and you can see that on the chart back here to another lower high and starting to come off. That's why we're starting to look at some of the currency plays out there, like the euro currency, which in my opinion could cycle back up to about that 120, 121 level by year end. So looking at this comes as the positivity continues as a huge earnings week kicks off here. We've got Verizon, General Motors, Tesla, Alphabet, among other companies coming over the next few days. I'm really going to be watching some of those Mag 7 names, things like Tesla, things like Alphabet, because of the fact that they're really big drivers of a lot of these indices. So outside of earnings, Wall Street's looking for a Powell hedge to trade as the possibility of Trump firing Fed Chairman Jerome Powell. Remember last Wednesday, there was a conversation where President Trump was talking about fire him, that he sent the letter, that they're already looking for replacements, things like that. What did it do? It sent the market into a tailspin. Now, many of you precious metals traders, you benefited from this because you saw the dollar index get clobbered. You saw gold futures shoot up quite well here. And that's the time that they bounced back up over the resistance point, right around 33.65, trading at 33.72 last. They got up to about 33.89, and then they came all the way back here as he discredited. A lot of times when you get around all-time highs, near session lows, near major lows, Donald Trump tends to make these announcements here that are contrary to what the market is doing in a way that he's testing the markets and testing to see what the reaction is. Don't tell me that he doesn't know what the stock market's doing and things like that, because if April continued that descent lower and we continue to crash to unprecedented levels, what do you think that would do to midterm elections? The way that they perceive him, further elections going forward would be destroyed from that point. So he can't do that. You really want to see, and what did he do? On that April low, he came out and he said, this would be a great time to buy stocks. He tweeted it out, he put it on social media and things like that, and his stock market lifted. So it's really important to look at what he's saying and what really could happen here. And this is where I tend to believe that, you look at the tariffs, the EU and the US are heading for another week of intense trade talks here as they try and clinch this deal before August 1st. But the reality is if you look at what they said beyond that, they said that they were open to negotiate after August 1st. And that's where the market is just becoming numb of any of this tariff discussion here and not really concerned about it. Now, what happens if they fire Chairman Powell here? Well, Chairman Jerome Powell, his term is set to expire on May 26th. Trump keeps saying that his actions are ruining the housing market. Remember, the Federal Reserve only controls the Fed funds rate, short-term interest rates here. Therefore, short-term interest rates would decrease. And when we saw the news come out, what happened? All yields came off aggressively. But the reality is that the short-term rates decreased, but the long-term rates, as the session went on, they actually turned back on all the way up and went positive. And if you look at long-term rates, in my opinion, if he did just come out and fire Jerome Powell, those long-term rates, which impact mortgages, could rise to 8% and beyond, because foreign governments would need to buy our bonds, which would steepen the yield curve here. So if you get some proxy in that's just going to cut rates aggressively because they're politically motivated on the short end of the curve, you're going to need to see the integrity reestablished, and that's where your long-term rates are going to continue to rise higher until they can get something like that. So foreign governments, they would need to buy our bonds, which would steepen the yield curve, and at the same time, stock futures would begin to decline rapidly, which Trump would not want, nor his administration here. And sure, gold would rise, the dollar would fall, but the credibility would dramatically come into question. I don't want to get into U.S. credibility, fiscal, politics, things like that, but it's just a fresh catalyst of the credibility even being dampened more. And then also, what President Donald Trump, I believe that he talked with Treasury Secretary Bassett, who's supposed to come on television here shortly, and I think he's in better communication with Jerome Powell, and he said, don't fire Powell, and it's because of the fact that I think that we're on the verge of an interest rate cutting cycle. That's why I'm bullish on commodities. That's why I'm bullish on silver, oil, Bitcoin, 10-year Treasury futures, not the yields, and then also now the euro currency. While bearish on the dollar, maintaining a minimum position on markets like gold, on copper, until they can break out over key levels of resistance, hold those and start to gain momentum where you see on the tactical ranges, those ranges go higher and higher. And then that's when I think that you could start to see the strength grow in these other outside commodities like gold, like copper, and we're already seeing that strength take way in markets like the silver, the S&P 500. We're seeing the dollar index roll over here to another lower high. We're seeing cryptocurrencies. You've got Bitcoin steadily pushing back over 118,000. You've got Ether pushing on up through 3,800, breaking out to the upside. Now on the Bitcoin contract, many of you working closely with me are long Bitcoin for the July contract at the 102 and below mark, down into the 90-some thousand, because we were looking at Bitcoin as a long-term asset beyond when we had that conflict that was going on between Israel, Iran, and the United States. And when risk assets had sold off aggressively, we had that come back down. And if you get the chart pack, it was at the bottom of that flag on the Bitcoin market is where we were looking at positioning on there, playing the trading range, keeping some of those futures onto the upside while adding an option overlay for a breakout. All of those positions had developed and developed quite nicely. Now what we'll look to do is with Bitcoin coming up for expiration, we'll start to look at tactical resistance 1 point, looking at letting go some of the July contracts on Bitcoin, and looking at tactical support number 1 on the August contract to try and seemingly time the roll out of July and into August. Does it work every time? No, not necessarily, but it's a different strategy here on trying to play what the probable volatility is in one of these markets in order to get out of one contract and into the other. And it's something that I often do in other outside commodities as well. Things like the silver market, things like the gold market, especially markets that as you go farther out, the higher the cost of carry is involved in some of these futures, where I don't like to roll at these higher levels going forward, especially in markets that are very costly, like silver, like gold, like other outside different markets that have that premium in place. I was going to say oil, but the oil market, the farther out you go, the cheaper it tends to be. Now, excuse me. Now, these aren't recommendations to the public. These are just observations and things that go into my head and the way that I focus, interpret in my multi-strategy, multi-factor model that I have for positioning in and out of these different markets. Now, we're going to have a number of earnings coming out this week. I mentioned that Tesla, Alphabet, those are the ones that I'm really going to watch. We'll have Verizon. We'll have Domino's Pizza coming out today. Something to note about Domino's Pizza. 5-6 years ago, I was in the middle of nowhere, Michigan, put in an order because there was only one Domino's Pizza, and you're out in the woods in the middle of nowhere. And I'm sitting there at an Indian casino. I ordered the Domino's Pizza, and it tells me, stay where I'm at for another 10 minutes. We'll let you know when you should leave, taking into account the traffic and everything. We'll bring it out to the counter because this was out to the car. This was during COVID. And it told me exactly, texted me exactly where I was at in the process. Hey, you should start to look to leave. And that's when I realized that Domino's Pizza is no longer a pizza company. It's really a pizza technology company. But that's off topic here. So looking at the economic data coming out, we'll have leading economic indicators coming out 9 a.m. And then we go into the Fed blackout window because of the fact that period goes until July 31st. Fed officials are no longer allowed to speak. So later this week here, we'll have housing data, which will be closely watched. And while the markets, they do remain near these all-time highs, and we do break out to all-time highs, it's important to remember that things could really shift quickly here. So at the end of the month, we have that deadline for the August 1st tariff approaching, but I feel like feelings are not a trading strategy, but what we're seeing is when more tariff headlines come out, especially aggressive ones, the volatility that we were experiencing before is becoming less and less volatile. So that's why I use the word, I feel like these are not having the impact that they once were. But if you truly measured and mapped the volatility from what took place in April to now, every time a negative tariff impact or headline comes out or aggressive things, and that's where people joke with Trump and the taco trade, things like that he's always, kicking the can down the road on these things. So that's one thing to watch. The jobs report is another thing to watch. It's showing signs of deterioration. As AI continues to take wave, you're going to see a lot of jobs replaced. They're specifically in technology right now. They're in other areas, but this AI growth is going to continue to absorb into different areas of the market and replace a lot of jobs. And that's where the labor market really begins to deteriorate. So it's a couple years out. That's where you get the apocalyptic scene in the jobs market, as many different things are replaced. You also have the Fed decision coming up. And I think that they are saying that, the Fed is likely to keep rates on hold, but we're getting so close. And if you look at Fed Governor Christopher Wallen, he advocated for a rate cut last week, as well as Michelle Bowman. They expressed their openness to reduce rates. And it's what he said really made the most sense is why wait for September when you could do it in July? And what would be the difference? What would be the negative ramifications of cutting rates in July versus waiting until September? I don't really see it here. I don't see things escalating upwards, although inflation is owning up and is moving up, and you really want to own inflation at this point in time. So you look at 10-year Treasury yields marching down about 5 basis points at 4.37. Many of you working with us have the 112, 115 September and 10-year call spreads. Not a recommendation to put on now. We put this on quite a while ago, and that is starting to work out to the upside here. You're seeing 30-year yields come off. You're seeing 30-year futures push on up, almost a handle. That's a big move higher here. You look at the outside markets, the VIX continues to grind lower. 19 is where we're at. I was saying that it's not a spot to put on because the VIX is at the top end of the curve. And then you'll want to look at where the VIX, you'll look at some of the lower levels here using, again, the tactical ranges if you want to get defensive in nature. But in the S&P 500, probably going to start getting defensive in nature once we get closer to that 6,400 mark. I think that would be a nice move upwards here where we would continuation and the froth, the FOMO would come into the market. And I think that's when things could start to come off again. You got the dollar index down about 0.3 of a basis point here, sitting at 97.92. The euro pushing on up. Euro is going to be a market that I'm going to be looking at to the upside here. Silver futures turning up nicely here. You've got a hook low, came down to the support level that we had identified on the chart pack, pushing on up here. We could retest those highs. Realistically today, we're pushing through kind of that first resistance point, that 33.80 or 38.86. 39.30 could be our next stop here, especially if things really get some momentum to the upside, especially the dollar index coming off, yields coming off, gold pushing up a bit, copper pushing up a bit, and you get the stock market feeling a bit euphoric, but not too euphoric, where we start to take some of those FOMO traders that are, I call them the froth, the people that move around from market to market. They've got no real substance in that beer glass. They're just the froth on top, and they tend to jump from glass to glass here once a new one is poured. And the S&P 500, the NASDAQ could be where they go, especially if you get that big breakout to the upside. So we want to see some of these participants remain in the silver market because they tend to pile on, and they're the ones that'll help push that market on up to that $40 mark. Now, 39.74 on a volatility adjusted basis could be about the top end of the move here today, unless some fresh catalyst came out, which I don't really see it at the moment. And if you look at where things are at, you've got this upward sloping trend line on the silver market, then you've got that $40 mark. And I think as we get closer there, you'll see some positioning start to come off of the table. So Looking at the ETF flows, the exchange traded funds, they cut a little bit of gold on Friday. They cut a big amount of silver on Friday, about 4.4 million troy ounces. They increased their gold holdings last week just by a bit. They reduced their silver holdings quite a bit, down about 5 million troy ounces here, and it was the third straight day of declines here. Longest losing streak since May 19th here. May 19th is when we saw a big push on upwards. And then also last May was when we really saw that move upwards here in the copper market. They increased their palladium holdings, but I think that was mostly short covering. Palladium futures back at that 1,300 level. Platinum running in the resistance at 1,500. So year-to-date percentage change, gold up 9.2%, silver up 7.4%. Gold-silver ratio sitting at 86-1. Outside standouts here, I think we'll be really active here in the crypto space here, those XRP futures. I'm already starting to trade them at different FCMs, and we should have approval here on the StoneX. They have problems connecting to some of the trade platforms, not StoneX, many of the other FCMs and things like that. If you're using a CQG-based product here, that XRP futures is not showing up here even after you place some of the trades. So that's something to note here. That's why you always want to check your statements when you're trading futures as far as positioning is concerned against what you see on the screen. But that's off topic here. And then you look at the grain markets, taking a bit of a breather here. We had a nice move upwards on the Friday trade session here. But you guys got any questions, reach out, register for the chart pack. I'm going to continue to update this, continue to add some more futures. The sugar market was one that I recently added. The 10-year treasury yields I added. I'll start to add Ether. I'll start to add the Ripple contract once we get really actively trading that. We'll start to add other things, other outside commodities, especially softs that are starting to move on up and hit some key levels and some channels. So you got any questions, give us a call, send an email, info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.